Hey guys, welcome back to the channel. In today's video, I did want to talk about Bitcoin and its relationship to the 20 and 21 weekly moving averages. Now that we're starting to find some resistance and currently rejecting off the range highs right around $25,000, we're starting to pull back here, and it is very likely we do see at some point in the next few weeks a retest of the 20 and 21 weekly moving averages, the red and green lines on this chart. And historically, these moving averages have been very, very important for Bitcoin, and they do a great job at identifying the longer term trend, the momentum. And with these moving averages, we really just saw them as strong resistance during the bear market, averaging down every few weeks, kind of just cementing that bear market trend. And then we did see that break back above the moving averages right here in the beginning of 2023. And since then, we really haven't had much of an interaction around the moving averages. They have started to slope back up, so they're starting to meet price sort of halfway in between the breakout point and sort of where we've peaked. So there is that scenario again in the next few weeks where we do see at some point a retest of this level. And that will be a very significant move to pay attention to, mainly because we want to see these hold as support. We want to see them starting to work in our favor, moving to the upside as support, sort of in contrast to what we saw in the bearish trend where they were sort of averaging down every week and acting as resistance. And that really did define that dominant downtrend that really told us where the momentum was. So if that can flip into support on a retest, then we would have the momentum and the trend starting to work in our favor. And we've really seen that play out in the previous bull markets. If I zoom out here, you can see we basically had that pattern playing out in the 2020 and 2021 bull market, where we broke back above them, flipped it into support, and then basically had that act as the floor where demand stepped in before continuing higher up until this peak. Same exact thing played out right here in the 2017 bull run. We can see that, we broke back above them in October of 2015. And then from that point, it was just consistently holding it as support, riding the moving averages up as this massive trend kind of progressed into that mania and blow off peak at that $20,000 range. So that's sort of what I want to see. Not has to reflect and exactly mimic the previous two cycles, but in general, that's what we want to see. That's the general pattern, where holding it as support on any sort of correction or dip back down, and then starting to have that trend with higher highs and higher lows working in our favor. So just as an example of what that could look like, not saying this has to happen, but in a scenario where coming back, holding it as support, we might start to have that trend really start to develop, where potentially we just have this sort of riding the moving averages up week over week. And that would be the most bullish scenario. Obviously, that is not guaranteed to happen. And of course, we could have the break back below them, which is also something that we have seen in the previous market cycles. Zooming back here to 2018 and 2019, that's basically all we really saw for several months, where once we started to break back below them on this local high, local peak right around $14,000, the price really just started to go sideways, oscillating above and below it, not really as support and resistance, but just kind of trending and chopping sideways. So obviously not the worst of scenarios, but of course, if we were to have that play out into the next several months, that would not be the most bullish scenario. And what that could look like is just potentially sort of ranging in this zone. Maybe we have some shakeouts along the way, but if we have that where we're breaking back below it, but it's not flipping into resistance, then that could just be something very similar to this move that we had in 2019 and 2020, just before the real bull run started to kick off. So those are really the two scenarios that I'm considering with Bitcoin. I don't give much probability to us breaking back below it and then flipping it into resistance. I think we've seen enough damage from this bear market trend, and I don't think that we have to resume that by any means, or that we'll have that moving average start to work against us. So that's not really what I'm going to be focusing on, but instead looking to see if this can flip into support. And if not, we might just have some choppy price action ahead of going sideways, and then potentially just building out more of a base, more of a range where we can look to as sort of a foundation for a future bull run. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out my Twitter page. I will leave a link to that in the description below. As always, hope you guys enjoyed it, and I will see you in the next one.